Welcome to the first webinar in the Swiss Re Institute series on succeeding in today's China despite COVID-19. There is a lot of speculation about what will happen to global supply chains as the current crisis evolves, particularly from a China angle, given its importance in manufacturing. We've invited two China experts to tell us what they are hearing and seeing in the market. Hairong Huang is the head of the Swiss Re Institute's China Center, and Kurt Harry is a senior vice president at Schindler, who formerly managed installations in China. My name is Richard Francis, and I'll be your moderator this morning. Before we get started, let me outline the program. We will have two short presentations from our speakers, then a Q&A session. You received the link to our app Slido, through which you can submit questions. Either scan this QR code or go to www.slido.com and enter #SRI. We will answer as many questions as we can during our Q&A session. Our first speaker is Hairong Huang, the head of the Swiss Re Institute's China Center. She is speaking from Beijing now, which will be very interesting. Hairong was formerly Deputy General Manager of the Xin Center, an innovation hub co-founded by Tsinghua University and Tel Aviv University. Hairong also served 9 years in the property risk management area at Munich Re in North America, which at Swiss Re we don't hold against you, Hairong. But please tell us what you're seeing and hearing there in China.
Okay, thank you, Richard. So my name is Hairong, and I'm in Beijing right now. I joined SRI I'm pretty new. So in last December, right after I joined SRI, I had a chat with my team talking about any visible risk people didn't pay enough attention so far. The answer was yes. So we brought out some examples. Pandemic was one of them. At that time, we will all agree, but thought the risk is still far away from us. So that was interesting. We were joking. It could be in the movie. We were so confident about our medical and public health system and the technology. However, only a month later, it became a real crisis. Not in regional, but global. So the affected regions are at the heart of many global supply chains. So Richard, this is, I just like to share with you in the beginnings, and everybody in the beginning say, it is a sudden shock from my side. And we can see this map shows as of the April 15th. Global-wise, there were total almost 2 million confirmed COVID-19 effective cases, including 600,000 in US to 162,000 in Italy. The death number was over 260,000 at the time, and the number is still continue growing day by day. So the virus spread out started from China in January, when government realized the virus is not flu and has fast spread out risk. They locked down the Wuhan city and then immediately the whole Hubei province from January 23rd, right before the Chinese New Year holiday break. However, the virus started to spread out from most of the provinces in China from February, and the government had to take the isolation policy to stop or control the virus spread out. So the business interruption had to continue after holiday break statewide. Affected by the pandemic, the trade data and the business activity in mainland China had been greatly reduced starting from February. And the traffic volume had also dropped significantly. More than thousands of companies and factories are temporarily closed. The factory activities in China are severely hit by the outbreak of the new virus. The manufacturing PMI index released by the National Bureau of Statistics fell to a 15-year low of 35.7, which was significantly lower than that in November 2008 during the global financial crisis, which was 38.8. So the overall PMI index of 21 manufacturing industries fell below 50 and entered the shrinking zone. That includes the chemical materials, general equipment, special equipment, and automobile manufacturing sectors, as well as small micro enterprises were hit the most. From January to February 2020, China's exports and imports fell 17.2% and 4% year over year, and the trade deficit reaches US dollars 7.09 billion. The outbreak of the new coronavirus, especially delays in resumption of work, logistic blockades, and isolation measures, have severely impacted the supply and the demand in the Chinese market, leading to a rapid decline in the above-mentioned indicators as of the February 2020. And these performances are in line with the shrinkage of the new orders and the new export orders sub-index in the February PMI data. So the March PMI data should be released over this weekend, the last weekend, but we didn't get the recent data yet, so I'd like to share with you later. We all know China has been the world's top largest exporters of the merchandise goods since 2019, and also has been one of the largest goods traders since 2013. So today we see increasing vertical integration with more onshoring of the manufacturing production in China itself. China is also relocating some of the lower value added production further to other emerging markets as it focuses on the domestic production of a higher value added products we can see from the chart over the more than 10 years, and the trend is getting increasing. The data only available at this moment is by the 2016, but the trend is keep going. This has the effects of suppression external goods trade, but boosting service-related value creation within China itself. We all know that the migration of the lower value-added labor-intensive industry chains adjusted and optimized cannot be stopped. So fortunately, China's industry structures has been adjusted and optimized in the direction of high added value, which is the top priority of the development of China's industry chain. After pandemic, in business decision, large enterprises will definitely increase the globalization of the supply chain and sales market. In this process, from market size to supply chain structure, in this the landscape, including the landscape and the completeness, China is still one of the most attractive countries we can believe. This finger in the slides shows above highlights some of the markets and manufacturing sectors that would be most vulnerable to supply chain disruption due to factory closures in China. For example, China is responsible for around 13% of the intermediate inputs that goes to the production of computer and electronic equipment globally. The risk of supply chain disruption has increased significantly, with most industry countries now mandating closure to contain the spread out of the virus. Disruptions are likely to be severe and will worsen if the pandemic lasts longer than expected, while the outcome will depend on the progression of outbreak, particularly in countries outside of the China, because we all can see the China domestic, it's the coronavirus is under well controlled. So far, all new cases increased by the imports and by the international travelers. since the virus spread out from the February, the central government of the China issued a series of the supportive measures to support work resumption from both government policy and the People Bank of China. From bank side, in mid of the February, China's central bank cut the interest rate on its medium-term lending as policymakers sought to ease the drag to the business from a coronavirus outbreak that has been severely disrupted activity. So it has lowering the rate on 200 billion yuan, equivalent to 28.6 billion USD worth of one-year medium-term lending facility loans to financial institutions by 10 BPS to 3.15% from 3.25% previously. And I think yesterday we all noticed they lowered the interest rate, the 5 years and 1 year again. 5 years at 20 PTS and 1 year is 10 PTS. So also it lowered the required reserve rate for commercial banks by 50 to 100 BPS for qualified banks in March, and additional 100 BPS for small banks in April and May. And they cut the excess reserve rate from 0.72% to 0.35%, and which is that's since the first time since 2018, the global economic recession. And other supportive measures, including allow mortgage and the credit card repayment to extend for one more month, while the delinquency in February, March would not be recorded in the personal credit rating system, and also extend the corporate loan up to 1 year for new startups and provide flexible loan support to small and micro enterprises. From government measurement, we can see in fiscal policy support, Ministry of Finance announced to increase the fiscal deficit ratio in 2020. And by the March 31st, newly issued special bond reached the US dollar about 0.16 trillion, up to 60% year over year. And the central government also, in order to strengthen inclusive financial service for SMEs and rural enterprises, help them overcome difficulties, then government decided to implement fiscal and financial policy linkage and extend some of the terminated alternative preferential policies until the end of the 2023. The policy has once again expanded the encirclement of the tax-free dividend from the time limit. The policy dividend will be accelerated to small and micro enterprises and further reduce the cost of corporate loans, mainly for SMEs and rural enterprises. So they also lowered the corporate required contribution to Social Security Fund for 3 to 6 months since February 2020. Free for SME enterprises up to 6 months, and reduced by half of large corporate up to 3 months. They spent emergency fund for COVID-19. By the middle of the March, government already spent total emergency fund amounted up to the US dollar 17 billion, as statistics shows. The other measures in medical areas also being issued. For example, they have the tax exemption reduction for medical service individuals and the targeted areas. They provide refinancing support to key medical supply and the related supporting sectors. The Ministry of Finance will cover 50% of the interest payment to ensure the actual loan rate is below 1.6%. Maturity is within 1 year. In addition, China's monetary policy to help companies, especially the SMEs, to stay in business. They issued a series of policies to help them out of the crisis. The most recent announcement in April 15 announced the banking and the financial organization need to enhance the collaboration with the core enterprises in supply chain industry to reduce the liquidity pressure on SMEs. And how this, the effective efforts to get the Chinese economy working again. So the official data suggests industry sector has already resumed by 80 to 90% by the end of the March. As we can see outside of Beijing, the people are free to travel back to work as normal. The school are gradually reopen, so it's gradually and back to the normal life. So the official manufacturing PMI rebounded to 52%, and the service PMI picked up to 52.3% in March, and this number will keep increasing, indicating Chinese economy is recovering. The newly increased total social financing reached the US dollar about 760 billion in March, a year-over-year of the 74%, which will provide effective financing for public investment projects in the coming months. Insurance growth, as we can see in January to February, have shown resilience in growth, much in line with our expectation. P&C premium growth is reduced 3.7% in January and January to February, which was is reasonable for us, and the life premium growth is 2% increase in February, January to February, and the health premium growth is 22% in January to February. As a recent consumer survey and the premium, the market, the growth in the life and health should be expanding in the next coming months. The other local governments also are trying to recover the retail market. Some municipal government announced the issuance of about a quarter billion US dollar, the consumer coupons. As of the end of the March, more than 20 prefectures and cities, including Hong Kong, Macau, issued the different forms of the consumer coupons to promoting the market. In the near term, the cost of supply from China may increase, stemming from overtime and expedited freight costs, as well as from paying premium to buy up supply and hold capacity. The companies are also working through alternative sourcing strategies. It will be critical to identify alternative supply scenarios and evaluate what this means for operation at this moment. So we didn't get as today, we didn't get the most updated consumption data for March. Also, we are lack of the hard, accurate information. So it's very difficult for us to quantitative or evaluate about how much could the domestic demand can help Chinese companies stay in business. So the COVID-19 is still growing in the US and Europe countries. Hope we can back to you with more deep insight and the forecast once the situation getting stable and better controlled. So the appendix, I listed the China's the measures in different government channels to support and recover the economy. And this is China's fiscal policy to help companies, especially SMEs, to stay in business and simulate the infrastructure investment from February to March. And that's also the policies, China fiscal policies issued. Thank you very much. So I'd like to discuss with you at a Q&A. Thank you.
Thank you, Hairon, for outlining for us there the emerging risk structure and also the situation with manufacturing and supply chains in China. That overview sets the scene for our next speaker to go into more details about how the crisis is being handled in a major multinational that is doing a lot of business with China. Kurt Harry is a senior VP heading up new installation and modernization at Schindler, obviously a company we all know well for their elevators and escalators. He worked in China for the better part of a decade and was the president of the Swiss-Chinese Chamber of Commerce. Kurt, please, what are you thinking about the situation?
Thank you very much, Francis, for handing over. I would like to share with you a document here. I hope you can see this well. So basically, I would like to talk or to address three major issues. One is the COVID-19 implications to the supply chain, in particular, at least to the extent what we can see today. And then actually I would like to talk about the significance of the Chinese market as a whole, as a domestic market. Then also a few words about the Schindler supply chain. So starting here with the supply chain reality. Here I have taken an example. I think it was about 3 years ago in a Swiss newspaper where you could see a charger cable of Apple. The price in the Apple store was 19 Swiss francs. At Amazon.com it was 10 Swiss francs, and at AliExpress 0.8 Swiss francs. So that's just a starting point about the significance of the integrating Chinese supplies into the global supply chain architecture. Then let's have a word to the very often quoted trade war between China and the US. You know, here we do have a situation which is not so terrible as it was often stipulated. When you look to the changes from 2018 and 2019, the trade deficit of the US to China has just lowered by $70 billion US, which is not so much indeed when you look to the entire GDP of China. It's not even a percentage point what the delta from 18 to 19 is concerned, and we are at the same level with the trade deficit as about 3 years ago, 2016. So there is a lot of politics behind the trade war and the implication to the trade war, but the reality, the real impact to the macroeconomy, to the global situation is minor, is not so severe. Now talking about the supply chain in particular, looking to the factor, the key success factor the supply chain architecture was built on, we had three of them: cost, quality and delivery. That was many companies had been focusing on those three items to build the most competitive supply chain here. And then now looking at this pandemic crisis we are at the moment in, yes, the implication to the supply chain is severe, and two more factors come up now: robustness to unpredictable disruptions. Some supply chains are simply not as robust as they should be, and then also supply chain planning as a predictive model for different scenarios. They are needed for forecasting and simulations of the supply chain capabilities. These are new requirements we see now in many companies. It has not a direct link to Schindler so much, but certainly also, but that's valid for all the company: robustness of the supply chain, and also being able to simulate on some models the supply chain plan. This is absolutely crucial. We will come back with a specific example afterwards. I give you an example how a more robust supply chain could be built on. You know, China remains, in the corporate landscape, China remains absolute key success factor of being integrated into the supply chain. I no need to take the AliExpress example with the iPhone charger cable before, but many elements in the supply chain are very cost competitive, not simple because of low labor cost or whatever, but because of the economy of scale we achieve in China. And so therefore, integration of the Chinese supplies into the global supply chain in today's environment is still very, very important. It could be managed as such that actually the base of the demand, of the global demand, could come 50 to 60% from China. And then we should establish a second and third source elsewhere with a bit higher flexibility for the average of 20% of the demand. And then with the ability to double the capacity in case, for whatever reason, the China supply would be stopped or the China supply could not continue, or let's say the second source or the third source would be having trouble. Then if the second source has trouble, the third source could double the capacity. That's a very simple math here to see how this could be managed. But it must be said, it has a price tag. This is not for free. And so therefore, in many supplies, we will experience cost increases. We will experience higher cost, or companies will have lower margins. It depends then a little bit to what extent they can give this higher cost to the market, but that has an implication on cost. Now coming to another impact, I would say, what we see in many companies. You know, China at the beginning was only producing, was a manufacturing place. Then slowly but surely, China also became more sophisticated in sales, in marketing, and afterwards in product development, and later in research and in people development. So, but now we see actually a lot of companies on the way that have not a full-fledged integration into the Chinese business, have not a substantial market share at the domestic marketplace. And so therefore, this crisis here comes with a very strong reminder that actually it should be fully implemented. Meanwhile, after 40 years of opening policies in China, research, product development, sourcing, outsourcing in China as well, production, marketing, sales and services. And also here, one factor which is very often neglected, strong collaborations with the government. This is much more important than in the Western world, in Europe or in the US. In China, this is the key. An emergency period, as this we have at the moment, create good opportunities for such government collaborations. This is crucial in China. Most important, build your local champions. Actually, in Schindler we have now more than 11,000 employees in China, and I can tell you that our supply chain, yes, we had tremendous challenges to cope with, but the local employees of Schindler in China made a miracle. They really have done an outstanding job of keeping control of the supply emergency all over the world where China supplies were affected. They have done a fantastic job, and no sophisticated model would have created so much value like our fantastic employees have done in this crisis mode. So this overall is very, very important to have strong, capable local champions in the company. The global marketplace, here I go quickly through, will it change in the crisis? And you see here Asia with 4.5 billion people, wherever, when people are driving the demand, Asia was a very hot spot in the last 20 years for many markets, and it will remain as such. There is no question. The trade, yes, there will be some implications we cannot yet fully predict, but even more important is a comprehensive localization of our businesses in China, in Asia. Here, the urbanization to suburbanization, China brings 20 million people every year into urban areas. So there is a constant demand for housing. That what it means, it needs living space, and if you take 20 million people every year into urban areas, and you make a model just with a typical residential building in China with 22 floors, 4 apartments per floor, 2 persons per household, means 3 elevators per building. That needs 114,000 buildings. That means 342,000 elevators. So this is just an example that makes us happy for sure. This is just an example how this market will not disappear, may slow down in some areas, but the main drive of the market, of the construction market in China, is the ongoing urbanization. And that's a government plan that was rock solid in the past, and we are full of confidence that this will be solid in the future. You see this on the cement production. China represents today almost 60% of the global cement demand, by far the largest in the world. So the significance of the Chinese construction market is given. When you then look to the global demand for new elevators, it's actually very, very similar to the cement production globally. China represents 60%, North and South America 6%. And you see the significance of the Chinese market is very, very important. In order to remain a competitive edge, you must participate on this 60% of the global market, and you must integrate the China's supply chain into the global supply chain, at least with the trade situation we have today, in order to be competitive in Africa, in Latin America, and in other regions in the world. Schindler just built a big factory with 325,000 square meters in Shanghai. Our biggest elevator production hub globally we have. To see this, to have an eye, or to respond to this very strong domestic demand, we have a new escalator plant with a capacity of building 20,000 escalators per year. Fantastic plant in Shanghai. Actually, there is a field operation where we have all the services established in the meantime. We have a big service portfolio in China. The supply chain is established. And we also bought some local champions, new opportunities in the market to build some dual brands. A company in the Henan province called XJ Schindler, and Volkslift is in the Jiangsu province, also a great company. There is lots of opportunities in this local market in China. We see fantastic buildings, great architecture, maybe due to the corona crisis some delays, but for sure it will continue to be a hotspot in the construction industry, and we are very much looking forward to it. Thank you for your attention.
Thank you, Kurt. A very enthusiastic. Seem to be getting a bit of an echo there. I hope that's not too bad. But thank you. A very enthusiastic analysis of the market and presentation of the market. That will lead very nicely into our Q&A panel. And there are a lot of issues that you both raised about how to be successful in today's China. I mean, despite the COVID virus and what's going on, you're both seeing a lot of opportunities there. For me, we can also have a little bit of a blend. The question that is on everyone's lips is when. when are things going back to normal? What are the factors that need to be in place for that to happen? So, Hiron, let's go back there. You're just getting the numbers for March. Let's go beyond the numbers and look at sentiments. What is the sentiment in China with consumers and businesses? Are they getting what they need from the supply chains there? What's happening with port activity? Are the goods going out? Can you tell us a bit about what's happening on the ground?
In China, the whole February, it's the business interruption. Definitely, it is more severe than right now. And during the February, and everybody, and also including government, focus on the virus. And starting from the March, so most above the virus, we talk more is about how to bring our business, bring our industry back. So we can see the most important industry area is on top of the recovering list in the government. So the government announced the policies, say what's a tier 1 industry should be recover. So they can back to the company, to the industry, the factory. So they listed the tier 1, the most important. That includes the harbor and the infrastructure facility and the very important. It's not limited to which area, but it's very important in the supply chain. For example, the Tesla and the Apple, and I believe the other those kind of the public companies, the government name it. It's public companies, which means it's not just the public in the market. It's just to say it's very important. So they have a list. So that these companies will have the more prioritized the policy benefit than the other industry or the other areas like the entertainment area or the service area. So this is what we can see. So I don't have the numbers so far, but we can see day by day in the news, in our life, we can see it's already trying to bring everything back to normal.
Okay, look, well, let me throw it across then to Kurt. You said the government's important. We just heard from Hairong the leadership that is there. Is it adequate? I mean, there's a lot of criticisms about what the government's doing in China. Are they doing enough to get things going at this point? What do you think of your company?
Okay, so from our company, good question. From our company, Swiss Re Institute, we have a Beijing office here, and we started back to office from February 3rd. It's really normal schedule, but everybody not back to office. Most of the people we encourage work from home. So we already prepared enough support for them. We have enough communication, and we have the team, separated team reporting lines to gather the problem or issues, including the if any psychology or mental, people nervous or any concern. So we have an emergent working team to help our company work from different positions. Even in February, we have people in Wuhan. In the quarantine isolation area, at that time our employee, not all of the country, all of the world, and gradually we just track each of the team, and we encourage people come back to the safer place if they feel more comfortable back to their own country. It's fine, or we can help them back to Beijing. So starting from the March, we encourage people to work to office no more than 50% capacity. So let's go
back to the factory situation and the supply chain. Kurt, what's going on with you in Schindler at the business level, and what you see with your competitors as well on this area?
Yes, and with many other industries, it's very interesting. Actually in China we have much more. Used to be because of the system, we have much more government regulation and government direct interference of business processes in China than we have in the rest of the world. So we are used to that actually in China, and therefore we had it was important to follow strictly all the measures put in place. But what's interesting to see now is that the government visits us, has spent a visit into our factory in Shanghai to ask whether there is anything the government can do to support the supply chain, in particular also the export. At the same time, the Chinese ambassador, Gang Wenbin, wrote me a mail asking the same question. Is there anything the government can do to help and support? And I think when you compare this to Switzerland, now we have also government intervention. But when then they open up again, the Swiss government will not send you a mail and say, can we help you to support your business here? This is really a difference and highly appreciated from the Chinese government. They really are very serious, and we have one issue, a small issue, but there is one issue. I mean, meanwhile, our factories run 120%. But we have, for the supply to the Middle East, we have a little bit of a bottleneck at the port. So we are having some difficulties, some challenges to bring the goods to the ships. And so therefore we are working at the moment on this. Government is also helping and supporting. And as you can imagine, after the supply chain was blocked for a couple of weeks, now we have an avalanche of goods waiting at the port. The prices increase, capacities are limited. There we need to have some patience. But in a summary, the government is trying to do its utmost to really support the going back to normal.
Well, let me get back again now to Hiron, and you were raising the point you've got strategic industries which are going to receive support, and we saw the supportive measures in your presentation. What about the other businesses? I mean, Schindler's a big business, but a lot of foreign and local companies don't have big operations. What's going to happen to them? Are we going to see a consolidation around big state-owned enterprises? Who's going to come out in the end of this crisis, still with business and perhaps able to grow their business?
I think from government, and they still keep the same strategy as before. They try to support and help all the foreign companies in China, the business in China, and whatever the problem, and they would very actively to jump in to help to give the support. But because the Chinese government eagerly to bring the economic back and the reactive the market, so they issued the new policy about the new infrastructure promoting plan. Mm-hmm. So this new infrastructure, they make it more clear than before. They announced in February, but it made it more clear yesterday. They said it's going to be the 3 major areas with the 7 specified the areas. The first area is, I just got the news. It's the information infrastructure. It's going to be on top of their supporting the promoting plan. It's including the 5G and the supply chain in industry. It very highlight its industry supply chain, and also the satellite supply chain and the logistic supply chain. So they highlight this will be the most important promoting area, and also they will highlight the new technology infrastructure, including the AI and the cloud and the blockchain. So this is the first, they call it the area, is a big area, they call it information infrastructure. And the second is their migration infrastructure, which means they still needed to develop the traditional infrastructure, but they like to deeply apply the internet and the big data, AI, or some the cutting edge or the new technology to support or the upgrade the traditional infrastructure area. The third is innovation.
I'll just build on that point a little bit. This has got very much, we saw there was a tech war bandied around in the media. Yeah, was increasing its technologies in response to a kind of a decoupling with the US in this area. I mean, wasn't that diversification already happening before the virus? I mean, this just seems to be some policies that are being brought out, which were already in process at that time.
Yeah, I don't think this issue is bring everybody on top of the table to discuss at this moment. And I don't see any good sign, actually, you know, because people, they didn't discuss, right? So I think it's still there, but I will keep more optimization about the coming future, because this virus made, and not China, all the countries like US, European countries, back to some, you know, economic recession situation. So I think at one day in the near future, I hope they can just, you know, stay on the same purpose.
Okay, well, on that note, let's switch back to Kurt. And look, you know, I've got to ask you this question, Kurt, and then we'll go to some questions from the audience. When times get tough, the tough get going. I mean, you know, you said that your employees are fantastic champions doing wonderful things. Can you give us a few examples of innovations or interesting areas along the supply chain which have added value? Obviously, nothing commercial in confidence, but where are they starting to add value to get those supply chains going and really take advantage of this situation, you could say?
Well, it's not as sophisticated as you might expect, but it's some very, very basics. It's first of all how you manage your sub-suppliers in China. But we saw that our people really had a very, very close tie to their own sub-supplies in China, and a very good planning in place, which helped us. You know, the thing was, while offices had been closed, factories had been closed, the construction sites did not close in many areas. So we were in a situation that actually we had factory not working anymore in China and now also in Europe, but the construction sites are going on. And that really, and we have big penalties, you know, in some of the areas which we had to manage. So far we managed very well, I have to say, because mainly in China we had very good connection to our sub-suppliers. They are back to full speed now, and also it was very smart what our employees did in China. You know, they asked, for instance, an operating company in the Middle East. They said, okay, I cannot supply you this and this and this part, but what are the components you need first for the installation? And then they said, okay, we need the guide rails first, we need the bracket first, we need the doors first. They said, okay, we make you partial delivery. And they said the partial delivery of the elevator systems to the Middle East, and at least they could start installation and relieve some of the pressures. So very, very pragmatic, and you know, the key is fast, not when the house is burning. They prevented so many emergencies, customer not even realized, because of the flexibility. And this is so Chinese, I have to say, you know, to see, okay, what can I do to make things better today? And there is no limits on creativity. And I think that really is not sophisticated. It's not a academic procedure. It's people.
It's a can-do approach, and that's part of your resilience and building the resilience, I assume. Look, we've got a question from our audience. Based on your recommendations about building second and third source suppliers, is there going to be a negative effect on this sort of localization on the Chinese economy? Are we going to see some sort of flight away from the Chinese competitive advantage there? Look, I'll ask Kurt first, Hairong, and then we can come back and get the stats. But it was addressed to Kurt.
Yes.
So
I answer in general, actually, as the Chinese market, we still have about 800 million people being part of the consumer of the consumer segment into China. And there is still about 600 or 700 million people to come. So a lot of less export will be offset with increased local demand, what China is concerned. But I think in general, when you look to global corporations and their supply chain, yes, there might be some industries where there will be a bit less export out of China, but not complete, because due to the economy of scale you have in China, the cost competitiveness of the Chinese supply is unbeatable.
Okay, Hairong, I know you'd like to add something. Please go ahead.
Yeah, I like the idea Kurt raised, because as I mentioned, the lower value, the production already spread out, the reduced in China in the whole supply chain structure, as I mentioned. So this is a trend, but it will not go forever. So the trend will keep going for some of the lower value production moving out, but it will get to a balance, another balanced structure, so it won't impact or hurt the whole structure.
Okay.
So actually, in China, the different they already shaped the Great Bay area or the Changjiang area. This area already shaped is from the upper to lower stream. The supply chain is a clustered region. So it has the material, it has the in manufacturing, it also has the demand. So it's already very high efficient. We said the new emergent, new industry clustered area. So this will be very helpful for the future supply chain structure in China, and make it more resilient.
Look, we've talked about this idea. Here's another question coming out from the audience. Once again, repeating this idea of the tech war, the trade war, China, US decoupling, and the COVID as some sort of a tipping point. Look, I think we've answered. The idea from the China side is that this isn't going to be a tipping point to reconfigure supply chains as they are. Let me throw it to you both. If there is some sort of a decoupling, or at least a bit of an alienation between the US and China, is this more opportunity for other suppliers and other trading partners in Europe or elsewhere? I mean, and how quickly could we ramp up our own supply, for example, to get into the China game? How long did it take you, Kurt, for example, to build this big China market?
Well, we did not build the market, but we built the company into this great promising market. But actually, I would say it just on March 19, last month, we celebrated 40 years engagement. Schindler was the very first industrial joint venture in the new opening China. So it took us 40 years, and now today we can say we are a proud Chinese company in China. And I think there we have a strong local presence with all the elements fully localized. But I would say, those trade war issues, the technology war, and there's a lot of politics behind. And the real implication, when you measure the real impact on the American GDP and on the Chinese GDP, is not so severe as you might assume at the beginning when you listen to all those claims. But let me say something which is significant for the American consumers, which they probably not really have realized. When you go to Walmart, 90% to 95% is China supplies. If this would not take place, the cost increase, the loss of buying power of the American consumers would be 20-25% impacted. This is tremendous, What we in the Western world have tremendously benefited from trade gains we made of increasing the buying power of our local consumers. and leaving the waste in China. And this is, reducing export out of China is, by the way, also part of a Chinese strategy. The Chinese government does not want that in a long term, in 10, 20 years, China will supply all the consumer goods to the rest of the world. They need it by themselves. And that's why they are going, as Hairong said, into higher value, adding higher value creating industries and less to the consumer goods.
But the opportunities for Swiss and European companies, you're there 40 years. Is it too late in some ways to get in? I mean, or is this crisis an opportunity to perhaps build better partnerships?
I think it's always, China does not disappear. China has really opened up significantly. We have to see some of the industries are limited open. I mean, the insurance industry, the banking industry, there are certain limitations. But I'm talking here for the mechanical, electrical industry. We had always open windows. We could really establish our business. In the past, we paid some money because of lack of experience how to do business in China. That's not the Chinese fault, that's our fault. But China, I trust, remains open to the rest of the world, and I hope very much it remains open. And I think it's never too late because China is too big.
Look, I'm going to throw another question that came through from Hairong. Sorry, Hairong, because we don't have a lot of time. Once again, the environment seems to have taken a back seat again after all this that's going on. Will the Chinese government perhaps throw the environment away in terms of trying to ramp up production and get things going again? What are we going to see there?
I don't think so, because I talked to the China Green Finance Development Committee, the chairman, in the past week. So we will keep working and promoting the environment as a very important strategic development in China. So we have the collaboration this year in the how to promoting the green finance. So this is the China would never will look back to like 10 years ago, 20 years ago. I don't think so. Not that this virus can stop.
Okay, look, we've got a few minutes left, and I'm going to ask first you, Hairong, let's quickly just say top 3 tips for succeeding in China, breaking into supply chains there, or building your supply chains. What are the opportunities that are coming out of this crisis for companies?
First, I think is the first tip is understand the Chinese government policy and the regulation. This is very important before you enter into the China. And the second is understand the market. The market demand is might be different in China, and also the way of the operation. And the third is be optimization.
Okay. Look, so what you're saying is there's opportunities to work with China to get in there, and it's going to be business as usual. Kurt, your top 3 for what we can do to get the supply chain, get into supply chains.
Right. The very first point probably is care for your employees. Everybody should care for the employees, for their health and their safety. This is most important, because business does not make any sense anymore if our people are not healthy. Yeah. So that's a very, very important thing. And then the other point, and that's also the most important, it's important everywhere, but even in China, I would say doubled important. Care for your customers. Ask yourself, what do my customers need? How can I overcome the challenges for my customers? This is absolutely essential. And then the number 3, the world after this pandemic crisis, and I'm not talking only about China, but I'm talking about the global implications. The world will be different. Reshape your strategy. So that's the number 3. That's absolutely essential. Care for the people first, care for your customers, and then reshape your strategy.
Well, that's all we have time for. The last word: reshape your strategy. So strategy is essential and very important as you move forward with China. Good time to be thinking about China in any case. Thank you very much, Hairong and Kurt, for sharing with us today your knowledge and views, and also for the lively discussion. Also, thanks to our audience for listening in and participating with questions. I'm afraid we couldn't cover all of them, but I think we got the general gist. We'll be sending you a follow-up email link to the Swiss Re Institute's website, where you can find the recordings of today's webinar in case you wish to share it with your colleagues. And then please join us for the next webinar in our Swiss Re Institute series on succeeding in today's China despite COVID-19. We're looking forward to having some special guests to talk about how the innovation system in China is adapting to the crisis. It was a pleasure to have you with us today. Once again, Hairong and Kurt, thank you very much, even if it was virtually, the new way of working, as we say. But please, everyone, enjoy your day and, zaijian.
Thank you very much.
Thank you.
Bye-bye.
Thank you, Richard.
Bye-bye.
Thank you, Kurt. Nice talk with you.
You.
Bye-bye.